Good afternoon, and it's a great pleasure to be here after multiple attempts. Many years I've been trying to come to Istanbul. I could make this time, but it's a regret I have to only come for 24 hours. I have to go back tonight to Singapore. So let me give you a next 15 minutes a sense of how Singapore, in the first 7 minutes, how Singapore became one of the world's largest fintech hub. In less than a 10 years time, it became from zero to the fourth or third largest hub. And I'm going to reflect for the first 7 minutes of what happened in Singapore, or broadly in Asia, what we did good and what is still an unfinished agenda in the space of fintech. When we look back 10 years from now, we all think that we have achieved a lot in the space of fintech. But when I do my own self-analysis of the journey I took as a Chief FinTech Officer at Singapore Central Bank, I think the world has become definitely much better, but still there are unfinished work to be done. And it is still fragmented. Financial systems are very complex and still very hard to navigate. So let's look at what really worked. Well, I must say that definitely fintech did make a change. But when we started our journey in 2014, almost 2 billion adults were unbanked. Now we are perhaps less than 1 billion, while people are unbanked globally. And definitely the role fintech played was quite meaningful and substantial, that they changed the way we think about bank. But still, if I go back and look very, very carefully, there are still a lot of unbanked population. There are small businesses, women, who still struggle to access finance, despite this remarkable transformation fintech has brought. And to me, that's the last mile challenge. So if any country is building a fintech strategy, you got to understand that there are layers and layers of segment of population where you got to focus and find a path forward. And it's not going to be easy, because at the end of the day, we got to run a sustainable banking infrastructure. It is not always easy to really get into the bottom of the pyramid when it comes to banking. For Singapore and for Asian countries, this has been a remarkable transformation, but still there are many people yet to be banked in this sector. And let me go through the challenges. The second challenge. What Singapore did over the last 10 years is to build a trust. You look at India, Singapore, Thailand, Malaysia, they focused, each of this country, the first public policy, the focus was to build trust. Because fintechs were trying to solve a market problem. Banks were thinking they were solving a problem, but they're not really getting there. And the public policymakers, the regulators, were struggling to balance between a fintech which is not regulated and a bank which is regulated. How do we get them together? And so that struggle led to this idea that the first step for any such trust system has to be trust itself. And a lot of the focus in the first 10 years in Singapore and reflecting the broader Asian market is building the trust system. And how did we build trust? By building public infrastructure. If you take the India example, Aadhaar, which perhaps one of the world's best run public infrastructure, which has the 3 layers of infrastructure from payment to identity. Many countries in Asia replicated that model. They built a similar infrastructure which starts with digital identity, then comes the payment system, a trusted data exchange, and a trusted consent system where all of us are entitled to share data based on our consent. And that allowed the system to be more trusted. That allowed the fintech, which is riding on the infrastructure, to be able to build that trust which a regulator expects for any participant in the market. The next challenge was to get how to decomplex the complex financial system, how to protect fragmentation. While there was a huge I would say, huge queue of fintech company building apps, getting consumer to experience the new banking services. It created a whole set of I would say, clusters and deep concentration of either of apps or a fragmentation of apps around the economic construct, which created a lot of confusion among the people that which apps to go for. And that definitely didn't solve much of the problem, because fintech was solving a piece of the puzzle of financial complexity. And many a times, payment systems are not necessarily interoperable. My own experience is that when countries upgrade the financial payment system, they do struggle. They do struggle in getting a standard stack which can interoperate with different countries. So having a non-interoperable payment system is still a big challenge in this whole industry. Despite money getting into the space, despite billions of dollars getting into the space, fragmentation continues to remain a big challenge. But there are some silver lining in the space. While complexity and fragmentation did increase, there's a change in the way we think about financial services. I'll give my own little example. Last year, my son, who just turned 18, was traveling to Thailand, and he took a ride in one of our popular Uber equivalent called Grab. And he reached the airport, and the ticket counter, the lady asked, "Have you bought a travel insurance? You are below 18. The moment at the counter, when the ticket issuer asked this question, the Grab app popped a message in my son's phone saying that, "Do you want to buy an insurance?" Because they knew that he is below 18. They knew that he's traveling to an airport. They looked at the location, and they knew that he needs an insurance before he takes the flight to Thailand. And at that point, he could click and get a travel insurance booked. To me, that is the biggest impact fintech had in this space to reduce complexity and fragmentation. They created something called embedded finance, which we'll talk today afternoon in a panel on embedded finance. So embedded finance became a big part of the answer to the challenge of complexity and fragmentation, despite there's a flood of apps, and despite there's still a fragmented systems in the network. And of course, the regulators do struggle to bring policies which will bring harmonization of different services in the space. The next challenge was, are the institutions ready for any such impact to the broader economy? And we saw COVID last year, in the last decade, how COVID impacted countries. And countries who had the digital infrastructure in place responded better to this space. And if you look at all the countries which took advantage of COVID are the countries which already had a public infrastructure in place. Look at Thailand, Singapore, India. They all had a great surge of digital adoption during COVID. In Singapore alone, we had a public infrastructure called Pay Now. During COVID, almost every citizen became part of the infrastructure. Why? COVID forced people to use these digital tools. So being ready for a crisis, for an unanticipated situation in the ecosystem with a great digital infrastructure is a key to succeed in many of the market. And if I look at around the world, still many countries are not ready with the right infrastructure. Banks' systems are still complex. Despite all the investment which goes into this into the sector, bank systems are still not highly interoperable. The desire to create more APIs within the banks is still a long way to go. In Singapore, in 2016, my first public policy in the space of fintech as a Chief FinTech Officer was actually put up a public notice to banks to build APIs. And it's still out there. If you can Google, there are almost 500 APIs the central bank suggested for banks to build, because we knew that at some point in time, banks have to open the system to build this opportunity to get digitally ready as a whole ecosystem. And of course, the use of cloud and use of a public KYC become key success factor to get ready for any economic crisis or general challenges as we look at the years ahead. Now, so I'm going to take a break here to summarize. Over the last 10 years, We looked at public infrastructure. We looked at public policy to get banks ready for connecting with fintechs. We looked at the challenges of not getting to the last mile of segment of population in the Asian market. We looked at how central banks responded to the future of, to the last decade of challenges. And if I have to do a short analysis, that on a scale of 10, perhaps we got to 6 to 7 in addressing the challenges. Still, there's a long way to go. The question is, are we going to continue to double down on the same pathway? My answer to this question is no, because there's a fundamental shift which is happening to the world of finance. And we do not need to follow the same path which many successful countries did over the last 10 years, which is, to me, DPI, APIs, use of public infrastructures to bring this coordinated response to fintech ecosystem. Because there's a shift in technology globally, and that can fundamentally shift the way we consider financial system today. To me, the first three will change everything we see today. And this is where Singapore is getting ready for the next 10 years. As you know, Singapore is a highly paranoid country. We always are worried about our future. Despite being highly successful, we always question whether that what we have today successfully run is going to remain successful in the near future. We in Singapore are looking at the future of financial centers, and to us, the top three is the way things are going to change because of this three key technology shift. Now, I'm sure yesterday and today, a lot of discussion has gone in AI. Let me give you a public sector view on AI. Now, from a consumer perspective, how AI is going to change? It's going to completely change the user experience. Today, when you go to a banking app, you choose an app, you choose a product, you buy it. It's an interactive UX. Going forward, that's not going to be the case. We are dealing with multimodal human interaction. There'll be no more UX the way we see today. There'll be a bunch of agents running around for you to do your jobs. You're talking to AI running on mobile phones, executing a banking transaction. The whole concept of interactive UX is going to go away. It will be a human interaction with a machine who is replicating your need, and they understand what you need real time. To me, that's fundamentally shift the way we consider financial systems interacting with the consumer. Now, that puts a lot of impact on the regulators, because regulators have to think about how to manage the systems, because these are intelligent agents running banking for you. Now, we predict in Singapore that this AI-driven financial architecture shift is somewhere around $1 trillion of economic opportunity. Countries who are going to focus on building ecosystem, public infrastructure, policies around AI in the financial system are going to succeed in the next decade. Now, in Singapore, we launched a policy called FEAT, Fairness, Ethics, Accountability, and Transparency. This was almost 4 years back, before GenAI came in. And we had an early sense that this is a fundamental shift happening in the space. As regulators, we responded to this market, saying that banks, fintech companies, if you are adopting AI, you got to comply to this FEAT policies. It is easier said than done. And what Singapore did, we responded to the market with a public-private partnership, and you can check it out in the Google, through Google search, that there are a lot of projects which MAS created to create that opportunity for banks to upgrade their system to comply to the regulatory expectation on fairness, ethics, and accountability and transparency in the space. And I'm pretty sure with GenAI coming, this will be more complex. And as a financial center, we are going to look at this very carefully to ensure that AI is being deployed responsibly, but we cannot stop AI to come in, because there are real benefit of AI coming to the financial system, especially on the lens of financial inclusion. It will bring down the cost structure. It will make our consumer experience much simpler. And third, is going to make financial services far more productive, effective in our daily lives. The second big shift would be in the space of financial product itself. Because today, you have a contract between yourself and the bank, and there are a bunch of intermediaries which are transacting on different financial product, bond, equity, deposit. We believe there'll be a huge shift, and the shift will be that every financial product will be tokenized. Why? Because central banks and regulators are coming to a closure on how that form of money should look in the future. It will be in four forms of traditional money. The cash will become retail CBDC. The wholesale cash will become wholesale CBDC. Banks' money will become tokenized deposit. And if there are alternate which regulators are comfortable to accept as a form of currency, will be very likely stable coins. And they are going to be the future of money. I'm not going to bet on crypto per se, but at least on these four currencies which the regulators are comfortable will be the new form of money. And this form of money are going to be used to transact, which is also tokenized form, whether it's tokenized bond, assets, equity, financial product. So with that new construct, there'll be a complete shift where financial products are sold in the market and transacted. Then the last piece of this is quantum. Why? I think we're running out of time. Why quantum is important? Because the infrastructure today on which we run our financial system is already compromised. It is a question of when it'll get compromised. The cybersecurity criminals have all our password. There's something called harvest and wait to attack on this infrastructure has already happened. So quantum computing is going to force a rethinking of our underlying cybersecurity infrastructure through a new encryption standard. There's already new standards coming. Banks are working on upgrading their infrastructure to the new encryption standards. Plus, with the power of computing coming as a part of quantum computing, you will see different innovation coming in this space. So between AI, tokenization, and quantum computing, there'll be a massive shift in the financial infrastructure. To summarize, UX will change. Financial products are going to change, the infrastructure is going to change. And together, they're going to bring the next generation future of financial services. Given we are running out of time, I'm going to skip the next two slides. I'm going to close by saying that still there are a lot of work to be done. Hopefully, with this shift, we can address the last mile challenges of getting into the bottom of the society when it comes to financial services. With AI coming, with tokenization coming, it will be easier for us to distribute financial product at a cost structure which is accessible to everyone in this planet. And with sustainability as the overarching infrastructure, I strongly believe the future of finance is waiting for a massive shift. I hope conferences like this will make that shift more productive, more responsible, and more sustainable. Thank you very much.